Hi, my name's Greg Martyr. I'm the Executive Chairman of Capital Metals. Listed on AIM, we have probably the highest grade undeveloped mineral sands project in the world on the east coast of Sri Lanka.
Greg, thank you very much for the introduction. Nice to meet you. Good to meet you in person.
Indeed.
You gave an interview with Matt about 2 weeks ago.
Yep.
Telling us all about your project. Since then, you've had some news. You've announced the end of Exclusivity and Sheffield Resources. Do you want to just kind of tell us a little bit about that?
Yep. Yeah. So interesting journey over. Actually, it's stretched back over about 4 or 5 years. Bruce Griffin used to work for a company called LB, which was Lomond Billions, which is the largest pigment producer in the world. He was doing their business development internationally.
Yeah.
So he tried to buy it he wanted LB to buy it back then.
The Eastern Minerals
Our
project. EMP.
Yes.
In Sri Lanka.
Yeah. Because they were looking for increasing and diversifying their supply source. They didn't for whatever reason, but then about 2 years later, he was no longer with them. He came back, spoke to them again, and they were interested.
Sorry, he spoke to who?
To the LB group. Lomond Billions, the pigment producer.
Yes, but
Yeah.
Bruce left.
Yes.
And then on whose behalf did he go?
On our behalf.
Oh, so he
sort of went out as a consultant on his own.
Okay.
And, he's right across the mineral sands space. We call him Mr. Mineral Sands, as you probably would have seen in the interview with Matt. Anyway, he was talking to LB again, and they said, "Oh, look, we're ready to engage." And so they ended up approaching us, saying, "Look, we're keen to really give this a good look."
As a potential funding partner.
Yes, exactly.
For
offtake and funding partner for the whole
Capital
project.
Metals.
Yeah. And so they came in, did due diligence, and then we had the issue with the licenses over about an 18-month period. They stayed with us the whole way, got our licenses back, and then they went a little bit slow once they got into, really got into the weeds on the legal situation and the title. And Bruce had always said, look, if they're not going to do it, I'd love to do it. I'm now the chairman of Sheffield Resources. And so I then said, okay, well, Bruce, let's go. And so we entered into a period of co-exclusivity.
And just to pull you back a bit, Sheffield Resources is what?
So Sheffield Resources is Australian listed.
Yeah.
It's they just finished the Thunderbird project in WA.
Market capitalisation roughly?
Market cap's about 250 last time I looked. The project cost was $484 million US, so a very substantial project. They did that in joint venture with Yansteel, 50-50 JV. Yansteel provided the equity, and they got debt facilities from Nathan from Orion. So he knows how to do JVs.
This is a classic mineral sands JV in the sense, or perhaps it's a classic Bruce JV. What you may not know is that I've worked with Bruce in mineral sands.
Okay.
And I've taken it to the point of a 50-50 joint venture on a project.
So we're talking Rio and Richards Bay, I presume?
No, it was World Titanium Resources in southern Madagascar.
I was a shareholder.
Toliara.
Yeah. Small world.
So those mineral sands projects, it seems to work on that kind of 50-50 joint venture, and obviously Sheffield Resources has done that with Yansteel.
Yeah.
And am I right in thinking that it's the same kind of thing that Sheffield is going to earn or potentially fund 50% of
Correct.
Eastern Mineral Project?
Correct. Yeah, I mean, you look at what's the logic for a JV, and it's generally, we have the project, we probably don't have the greatest capacity to raise the full amount. We want some more expertise coming in. So we're either looking at funding and expertise from the OEM side, from the off-taker side, or funding and expertise from the capability side, which Bruce brings in spades with the Sheffield team. So,
and to bring it back to that news release, which came out a couple of days ago, there was something about exclusivity, some exclusivity ending, another exclusivity beginning.
Correct. So on the 15th of March, we announced that we were giving that 60-day co-exclusivity, which finished yesterday. So that was that first period. That was two for LB Group and for Sheffield. And we basically said, guys, you've got 60 days, put your best foot forward, and then we'll make a choice off the back of that.
Right.
When we actually entered into that co-exclusivity, Sheffield took 10% and put money in, put £1.25 million into Capital Metals, and took 10% of Capital Metals and plus an option to go to 14%.
And that was a direct funding. It was the no strings attached, other than a kind of a sign of commitment to the team and the project.
Correct. And then Bruce came on our board as a result. Okay. Yeah, there was no linkage. At that, it was a term sheet that said we're in discussions about a full funding agreement.
And it's really interesting that LB through Bruce has had an interest in your company for a number of years.
Yeah.
And Bruce and Sheffield Resources, again through Bruce, have obviously that the eyes have been on this project for a long time.
Correct. Yeah. That's spot on. I mean, I might have sounded a bit convoluted at the beginning, but I think it's important to understand the history. And clearly, Bruce likes the project, has been around it for a while, and he has aspirations to grow his company. Yeah. And he's trying to get his foot on assets. So he's got a similar strategy in Brazil where they can farm into that asset.
Through Sheffield.
Yeah, Sheffield in Brazil, and now Sheffield in Sri Lanka, and hopefully, I think the idea is to have the cash machine back in Australia to feed the growth plans.
Okay, let's look at the asset. It's called Eastern Mineral Project. You've got 17 million tonnes of resource, and a big licence area around that.
Yes, yeah. So we've got about 60 kilometres from Olivelle in the north. It was right on the east coast. And it takes the easternmost point of Sri Lanka. So Olivelle in the north, right down to a place called Panama in the south, which is just below Aragon Bay. So they did resource drilling 2016, mainly hand auger. It's still only a resource, it's not a reserve. It'll be a reserve when we do a PFS, which is the intention to do with Sheffield. About just under 2,000 holes of about 3,700 metres. So on average, those holes are less than 2 metres.
And sorry, when you say you've got 60 kilometres from the port, there's a port at Olivelle,
correct? Yeah,
and you've got 60 kilometres of beach, of beach,
basically.
And how far in do you go?
Well, so there are blocks of 1 kilometre by 1 kilometre, and it basically follows the coastline. So sometimes we're up to 2 kilometres in. Yeah, sometimes we're only 1 kilometre in. So it varies, but there's a lot of room. I mean, if you look at our resource, it looks pretty thin following the coastline, but interestingly, this project may not exist if not for the tsunami. The reason being is after the tsunami, obviously there was a lot of destruction.
Which was 2002, 2004?
Yeah. It was. I remember going there in 2006 as a tourist, and there were still boats up in the trees. So I think it was 4 or 5.
Okay.
And so they said, right, we're not going to let that happen again. They created this Coastal Conservation Department, CCD, and they gave them management of the first 100 metres of coastline right the way around the island, just to make sure that the wrong type of construction wasn't going to happen. And so you have to get everything run through them. What it means is for a very large chunk of our resource, probably 70-80% of it, they're the only manager, landowner, so to speak. They're not the owner, but they control all the decisions. So we have a very good relationship with them, and have kept that relationship right the way through, even right the way through all that issue we had with the GSMB and the previous Environment Minister. They're very supportive. So, and the reason for mentioning the amount of holes that have driven that resource is that clearly the resource is going to be a lot thicker than 2-3 metres.
In depth?
Yes. Yeah, a lot deeper. Right?
Okay.
Yeah. We did an EIA that was approved a full EIA approved in 2021. You have to do that before you can apply for a mining licence. And in that, we agreed to only be allowed to mine to the water table. Now, around the rest of the world, we know that mineral sands projects go below the water table. We let that go, and we said, look, what we'll do is we'll show them, we'll demonstrate over time that it does happen responsibly. And we're only just starting to reopen that box again now, but there's a lot of resource below the water table, there's a lot of resource inland. We're very confident that resource is going to grow.
Have you found the limits? I mean, has there been any exploration work to say, this goes for 100 metres inshore or 200 metres?
Not enough. And in fact, we've got some red sand targets that are, kilometres inland.
Red sand
there's a fair bit
being garnet, or
higher garnet content. There's a fair bit of erosion inland, so we're not. It's not something that we're saying is a high priority target. There's enough high priority targets adjacent to the existing resource.
And what about north-south along the coast?
No, we're pretty happy that we've got that quite well covered. In terms of, we've looked north.
You look north, and does it kind of fade out?
It does, and pinches out as well. More population, so we have a tenement to the north of the resource called the L430, which encapsulates the port.
Yeah,
because there is some grade in the sand in the port. The port's I don't know if you've seen it, but it doesn't work. No ships can get in and out. It's not being used.
Which port?
The Oliveville port.
Oliveville.
Yeah, it wasn't very well designed, and it's filled up with sand because it wasn't being used. So, but there's definitely mineralisation in that in what's in the port. But the point being is we've looked and we've explored north of the resource, and we're going to reduce that tenement down to about 6 blocks. It just gives us control of the port and a linkage to the top of the resource.
What I guess I'm driving at, or what I'm just trying to get my head around, is in your presentation you talk about grade upside. We can talk about that. We talk about resource upside in terms of kind of acreage.
Yeah.
What I don't have a feeling for is the 17 million tonnes that you've defined in your resource, does that cover 90% of your area or 19% of your area?
Well, we used to say that it covers 10% of the area. But with a little bit more work, I think that was a bit aggressive because we've probably isolated some areas, and I think that was overstating it a bit.
Yeah.
And it definitely covers, sort of 10% of all of our
tenements.
But I don't want to overstate it, but this could easily multiply 3 times the resource. It's not going to be a 200 million tonne resource, but it could easily be between 50 and 100, I think. 100 million.
And obviously we don't know because you haven't done the exploration, but just in terms of the kind of the indicators, the early stage, it could potentially be 3 times. Just so I got that in my head, that's useful.
So we've got some KPIs on some of the key guys in the team that that are quite attractive as soon as we double the resource. So then the NPV impact for us is obviously very substantial. And our strategy is to have somebody take 50% and fund it.
Yeah.
And by increasing the resource, it will be like we haven't given up 50%. Our share of the NPV will at least double. So but we're prepared to give away that upside as well to be able to get it funded.
Well, yes. I mean, it's growth capital, really. It's what you're talking about.
Yeah. Well, it's unlocking the value, right? Which we could. But I think this is a better way to do it.
Okay, so you also mentioned grade, and in the presentation you talk about you hit some high grade intervals. 1 meter at 26%. Yep. I think you've even had 1 meter at 80%. But generally, I'm interested in kind of average grades of resources, kind of global grades or grades for a year or two. Because it's very easy to kind of point to a kind of
of course,
a high grade interval.
We're never selective in this industry. But I might have mentioned a few. No,
but
what I will mention though is we've got a few that are 14 meters, 12 meters that are above the resource grade. They're not in the resource. We haven't been, because most of it's been done by hand auger. So we now have our own sonic rig that's ready to go, and we've rented an air core rig ready to go.
Yeah.
And we're just dotting the I's and crossing the T's and about to launch onto. The primary purpose is to underwrite the mine plan for the first few years, but at the same time we will laterally extend, and there'll be quite a bit of exploration work in this next program.
And if you can take the grade up by 5 or 10%, that's a win.
Yeah, absolutely.
Have you done any reconciliation work yet between the hand auger and the sonic rig or the air core?
It's a good question. I'm not sure, actually. I don't know whether I wasn't around for the drilling programs, but I don't know don't know whether they've done that, but I will certainly check.
Yeah. I mean,
I'm sure they would have. So the guy we have running the exploration program is Richard Stockwell. He's ex-Aluka. He's very well known. He was ex-Base Resources.
Right.
Interestingly, he was with Base, and Base came and visited us a number of years ago looking for other projects. He was very keen on it. He could see the potential expansion. I think they thought, I want to see 50 million tonnes now. And anyway, he left Base and he's now with us because he could see the upside. Okay. And he's on those KPIs.
And let's talk about the NPV of the project.
Yep.
Because there are several ways you can tackle it.
Yep.
You can increase the tonnage, you can increase the grade,
yep.
You can work on the and the flow sheet, how you approach it. Also, I think in your the news release that came out a couple of days ago, you talk about you're going to reveal a funding plan up to the point of construction.
Yes.
And then the funding beyond that.
Yeah.
Have you got any more detail on what that funding up to the construction entails, and what's the strategy and what's the approach?
So, assuming that the deal goes ahead, we have already discussed a budget that takes us to the FID point.
Yeah.
A key component of that budget is PFS.
Yeah.
So, Sheffield, they can't report an NPV without a PFS, whereas under AIM we can. And I wanted to ultimately be able to classify it as a reserve. And of course, want to increase the level of study that we have and increase the level of confidence in our assumptions. So that we're assuming that we could get to FID certainly in the first half of next year. I'm targeting sort of by the end of the first quarter. But it will be what we will be.
But that's in a sense that's the FID on the PEA plan, which is to start at 650,000 tonnes per annum.
No, well that's what we're going to work on as well, and that's another impact on the NPV. So we worked on a 4-stage process.
Yeah,
and that was a lot of it was driven by minimising the capital outlay. So we wanted to get to self-funding as soon as possible.
And that was the $81 million.
$81 million is the total CapEx. $37 million was all we would have needed to get to self-funding, right? So nice plan if you're a junior, but if you've got a bigger balance sheet, you'd go harder, right? I think we will end up, going for more tonnage early. And the size of the concentrate plants and then the mag sep. We're probably going to do the mag separation until 18 months. So it's definitely still going to be concentrate first and then magnetic separation. And then we will see where the non-magnetic is justified. That's sort of down the track.
Electromagnetic separation.
Yes.
Yeah. So I hear what you're saying, and I kind of agree with it. Whether you've got a bigger partner, you've got a bigger balance sheet, and there's probably a higher value approach to the project.
Correct.
If you do things in a slightly different way.
Yeah.
Which, in my mind, would include doing more exploration. And
absolutely.
Because it might be that you can take 17 million tonnes to 25 million tonnes or 20 million tonnes or 30 million tonnes, and you can change the way that you approach things, and you can change your return. But that's going to take time.
Yeah.
So, in a sense, I would say that FID early next year is too early.
Look, we are very confident that even this current drill program that we've got, and by the way, going back to that budget, it's about $1 million for a PFS. We've got in there a bit under $1 million for exploration, and then there's growing the team, and then we've got a balancing item of land access, whether that be lease agreements, purchases, and so that exploration. I mean, we're pretty confident that sort of who knows what it's like getting assays, etc. done. They seem to be a fair bit of competition on that, but pretty confident by the end of the year we will have a very good handle. Even before that, we'll know, because visually it's a bit of a giveaway.
Have you got the land access? You said you got the sonic rig.
So yes, it's our own sonic rig. Yep. And land access. We've got the CCD land access on where we have our grants, our industrial mining licenses. We're intending to start in an area that is run by the Coconut Cultivation Board. It was the CCB. And they have 46 hectares that we want to start mining in, where there's resource and there's also potential. So that is an area. There's a river mouth, so there's a natural starting point because we're mining from north to south on cells, 150 by 50 metres, with constant rehabilitation.
Hydraulic
as we go. No, it'll just be front end. It'll be a digger and
dig.
Yep, digger, truck, slurry, concentrate. Mobile concentration plant, sort of 48 spirals on skids, I think, is probably the last plan I heard. Yeah. So, where does that take us? Yes, you were saying it might take a fair bit longer. I think there'll be enough confidence, because what it'll be is if we're going to increase the production rate early, you're shortening a 10-year mine life. Have we got enough to offset that? Have we got enough confidence to offset that? Go harder. Yeah, we're very confident we'll still be there in 20 years.
Yeah, okay.
And our MPV is based off 10. So
let's jump to the port.
Yep.
And how you get the material out.
Yep.
I think your mine area is 32 k's from the port.
Yep. The initial mine area is.
The initial mine area.
Yeah. The top of the resource is actually right under the port. Right. But where we're planning to start. So that would be trucked to the port. Truck concentrate to the port.
And then you've got the port issue, which is it's shallow. It's kind of 8 metres.
8 metres. Once we dredge it, it can only go to 8 metres. That's my understanding. And which means you can only get sort of handy vessels in there that can do 10,000 tonnes, which are fine. They're economic to go to China or wherever from there, and happens around the world. But we're looking again, and we've got 2 logistical companies. We've got trying to give us a better idea whether there are other solutions in country. There's a big port down south at Hambantota, which is run by the Chinese. We could go across to even back to Colombo. The roads are getting better around the country. There's a rail system. We just wanted to say, okay, maybe the port's not the greatest. Maybe there are more economies of scale elsewhere. The land at the port doesn't have to be there. We could get our own land, probably cheaper than what they're proposing to lease it for. So, but the port, it's sitting there, it's not occupied. I think they'd love us to dredge it, and so it's working again.
What about the wave action, the surge, the swell?
It's a big issue. I think we need to. What we don't want to be doing is constantly dredging it.
Yeah,
because unless it's got a nice grade coming in on a consistent basis.
I mean, you've got the whole of the kind of Indian Ocean off to the east, don't you? It's kind of
a lot of their resource comes from the Bay of Bengal, so it's wrapping its way down around.
Yeah, it's not
if you
quite
look
as
at
bad as
Lanka
Madagascar.
Minerals. No, it's not. But Lanka Minerals in the north are about 300 k's. That's the government-owned mineral sands. They're in production, have been since the 60s. Apparently, could be run a lot more efficiently. Surprise, surprise, and a lot more environmentally friendly. But its resource gets replenished. They don't do much more exploration. It's just constant replenishment. I don't know whether they go and have tea and come back in a year, and there it is. But
from the wave action,
yes. Yeah.
When it's FID, and you're on PEA now at the moment. You've got to come. There's got to be a kind of a study in between. There's there's a lot of detail that needs to be kind of fleshed out.
Yes. I mean, yes and no. Would we have gone ahead on our own if we could get funding that was offtake funding or vendor finance? Would we have been allowed to go ahead and build, or equity? Like some people tell me that in mineral sands, your best feasibility study is to start mining. Yeah. When you have that grade, there's you've got a fair bit of confidence. Now, of course, we're going to go and do a lot more drilling to increase that confidence, certainly in the first few years of the mine life. But I think the PFS is the right way to go. I certainly wouldn't be going to BFS, or I don't think we need to go to that level.
Yeah. And offtake, how does that conversation work?
Well, from what we're partnering with Bruce because he clearly knows where it all goes.
Yeah.
LB, we're very open to discussions with them. Who knows where LB went? Maybe they said, Bruce, Sheffield's interested. Maybe we'll let them build it, and we'll just come in for the offtake.
Yeah.
You know. So, but we're not worried about the offtake. There's plenty of parties out there.
And the mix of products, it's mostly ilmenite,
Yes.
zircon.
Yeah.
Any deleterious elements?
No, there's no slimes. Very minimal. It's apparently very clean on a relative basis. So we'll initially sell a concentrate, and then we'll sell a magnetic concentrate, separate out the zircon and the rutile, and then ultimately, if we electromagnetic to that, then yeah.
And in the mining, any clays? I mean, have you?
No. It's very clean from that.
So it's well sorted. It's well washed.
Yep. Yeah.
Good.
Yeah.
Now your market capitalisation, £18 million.
Is it?
I think it was this morning.
I think in dollars.
Sorry, so was it 22?
I think in dollars.
25?
I think we're 344 million shares at around 5p. What's that? I just think it's around $20 million, because all our costs are in dollars and all our...
All right, so, 2020.
And as an Australian, pounds...
Yeah, I know.
Particularly staying in the hotels here, it's just...
Too painful.
Yeah.
Okay, so $22 million, thereabouts.
Yeah.
You've been at the one-to-one conference this week.
Day 1 yesterday, day 2 today.
And what's the reception been to your news? I mean, have you had inbound from other shareholders?
Well, a lot of our shareholders, actually, I met with quite a few of the shareholders on Monday, Tuesday, the one, long supporting shareholders, all very positive.
Yeah.
Yeah, very positive. My job now, we don't need money. I'm probably one of the few companies at 1-to-1 that doesn't need money. And that goes down very well. And so my job now is to get greater liquidity in the stock, just get more buying and hopefully upgrade the register with a bit more professional and institutional money.
Yeah. Good. Well, good luck. I hope you enjoy the interviews, and good luck with the months ahead.
Excellent. Okay. Thanks, Merlin. Thanks a lot. Yeah, cheers.